So there's a lot of algorithms right now that we talk about these computerized trading algorithms, we talk about the systematic traders. Those are all kind of lined up right here at the 50-day moving average. So again, a break below that 50, that's going to trigger a lot of selling in the markets and lead to a sharper decline. So here's what you need to know before the bell. So a couple of things that are going on. So again, yesterday, the market did sell off here a bit, and that was overall, this was, kind of expected. We've talked about a little bit of volatility, kind of the first trading day for, the month of September. September, as we said before, tends to be a little bit weak anyway. So again, this little sell-off here yesterday, not real surprising. But importantly, as we kind of look at kind of the action in the overall market, it's been very compressed. There's not been a lot of volatility pickup. There's not a lot of action really kind of going on. Markets are moving, but not really in big moves in one direction or the other. So this tends to kind of lead to this kind of sentiment issue where we have a lot of complacency in the market. Investors are very complacent. But we did break below that 20-day moving average yesterday. Now, if the market trades up today, we're going to be back above that. So again, as we talked about before, a break is only valid if the break holds through the end of the week. And so again, just because we took it out yesterday doesn't, this isn't like triggering stops. You shouldn't go selling stuff. If the market, fails at this 20-day moving average today, market opens up a little bit, then sells off again. We're back below it today. We closed below it on Friday. Now you've got a valid break of the 20-day moving average. And now this is where, concerns start to come in. We start talking about the 50-day moving average as next level of key support. Below that, it's a long way down before we get to any kind of, significant support levels for the market. So this 50-20-day provides some very near-term support. As long as the markets can hold that, it's going to be okay. But we get below that level around 6,300 or so on the S&P. There's a pretty decent drop between 6,300 and 6,000. So the market could have a little bit bigger correction if we get into that space. But we're not there just yet. But again, we've been talking about recently, this market, it continues this kind of very low volatility rise. Yes, we had a little bit of a decline yesterday, but again, markets recover back up, start pushing back up again. This is going to be negligible here. But it's been very, very complacent, very low volatility at this point. But we have this negative divergence still in momentum as well as relative strength. And that negative divergence is increasing as we kind of go forward here. So as we talked about before, that tends to lead to bigger corrections. Maybe this was the start of a corrective period here for the markets. That would certainly align with the month of September, which tends to be historically weak anyway. And as we talked about yesterday, we're going to lose buybacks here in about 2 weeks. So that's going to be another buyer that comes out of the markets. But again, this is just kind of that risk profile that we've talked about recently. And again, if we go back and look at volatility as a function of all this, volatility just remains extremely compressed here. So again, anything that really kind of shakes up markets here is going to lead to a sharper correction potentially. Some piece of news that comes along that really kind of rattles the markets. You're going to have a sharp spike in the VIX that's going to lead to a sharper decline in the S&P. And again, the thing we really want to watch here more than anything else is this 50-day moving average, because that's really going to be key support here because of that gap that shows up between that level and really next levels of support are decently lower. So there's a lot of algorithms right now that we talk about these computerized trading algorithms, we talk about the systematic traders. Those are all kind of lined up right here at the 50-day moving average. So again, a break below that 50, that's going to trigger a lot of selling in the markets and lead to a sharper decline. So it's at least worth hedging your portfolio a bit, at least for this month, until we get through this month, and then we start getting to the seasonally stronger period, kind of that end of the year, October, November, December time frame. So again, just something to think about here as you're kind of managing your portfolio. And again, we'll touch on an article I wrote on Monday that posted out on Labor Day as well this morning, just talking about portfolio risk management a bit. But that's what you need to know before the bell.